Good morning friends, welcome to the point. In this video we will discuss two kinds of banks, which is cooperative bank and regional rural bank, and what is the purpose of their formation. So we'll start with the cooperative bank. First is the cooperative banks are financial entities established on cooperative basis and belonging to the members who are its owners also. So I'll give you just a brief about what cooperative banks are. So if you see, there is commercial banks, which we often see everywhere. So there's one category, commercial banks like HDFC, SBI, Axis Bank. Now these commercial banks are formed with a motive of earning profit. Okay, that's why their name is commercial bank. Whereas these cooperative banks are formed for the cooperation or helping the members who are its owners also. So let's suppose there are 50 people who are coming together, pooling in money and deciding that whenever somebody out of those 50 members wants help as a loan or for any purpose, so this will be provided by the cooperative bank, which these 50 members have collectively formed. These cooperative banks, unlike these commercial bank, does not have the profit motive. It is for the cooperation or for helping the members who have formed the bank. They are registered under State Cooperative Societies Act, that is the state registrar, and regulated by Reserve Bank of India. So they are under the dual regulation because every state has its own cooperative bank. So state would also like to regulate it, and centrally when it comes, then the regulation comes in the hand of Reserve Bank of India. They are governed under Banking Regulations Act and Banking Laws Cooperative Societies Act 1955. So I hope it is clear that the commercial banks which are formed, which we see everywhere, are formed with the purpose of earning profits, whereas cooperative banks, as the name suggests, cooperative or cooperation, it is for helping their members who have formed it, and its members are also its owners. The features of cooperative banks are customer owned entities. Cooperative bank members are both the customers and the owners of the bank. As I told, 50 or more or less people coming in together and forming a bank or a cooperative society working as a bank. Democratic member control. Cooperative banks are owned and controlled by the members who democratically elect a board of directors. Members usually have equal voting rights according to the cooperative principle of one person, one vote. So it is the collective decision which takes place, and it is not that one person is dominating over the other. The decision making is done on the mutual consensus. Profit allocation. A significant part of the yearly profit, benefits or surplus, whatever you call, is flowed back, and a reserve is separately maintained so that in case of future needs arises to give loan to any of the members, so it can be given out of that reserve. And even after that, if some money is left, it is distributed amongst the member who has contributed a capital. So it is kind of return on their capital, but that is given only after a reserve is made. Reserve is made of the money by plowing back the profits to give the loan in case the future needs arises. Financial inclusion. They play a significant role in financial inclusion, the unbanked rural masses. So these cooperative societies or cooperative banks are usually formed in rural areas because the banks does not reach, or the accessibility is not that great as compared to urban areas, so that the rural masses don't fall prey to the money lenders and they're charging exorbitant interest rates. So these people come together and form these cooperative banks, and this helps in the financial inclusion of the people who are not covered under the formal banking system. So the next slide, which talks about the examples here, these are some famous cooperative banks in India. And recently, if you are updated with the current affairs, there was some scam related to this Punjab and Maharashtra Cooperative Bank. So you can just go through the list as to what are the examples. You don't have to actually or totally memorize it. You just need, this is just for so that you can know what all banks are under this cooperative banks. Next comes the regional rural bank. As the name suggests, regional rural bank. Now these regional rural banks are the scheduled commercial banks. See, there it was not the commercial banks, they are the cooperative, but these regional rural banks are the commercial banks, which means motive is profit. In India, conducting banking activity for the rural regions at the state level. They were established with an objective of providing easily accessible banking and credit services to the rural population and mobilizing financial resources from the urban areas to rural districts of India. So what they do is they take deposits or they accept deposits from the urban population and channelize that money for giving loan to the rural population of India. By this, farmers can formally be included in the banking system of India and can avail the loan facility at the economical rate of interest. So the regional rural banks were set up on the recommendation of Narsimham Working Group 1975, and after the legislation of RRB and after the legislation of Regional Rural Bank Act 1976. The first regional rural bank, the Pratham Gramin Bank, was set up on 2nd October, which is also the birth anniversary of father of our nation, that is Mahatma Gandhi. Because Mahatma Gandhi really paid emphasis on empowerment of the rural people. So I suppose that's why this date was chosen. This is what I think. There could be some other logic also, but yeah, that is what I think, that this date was chosen to open the first Gramin Bank. Yeah. So moving on to the next slide. Ownership structure of the regional rural banks. Like in the cooperative banks, they were the members who owners. So some people coming together who are pooling in the capital and they're opening bank. In case of regional rural banks, the capital contribution is like central government constitutes 50%, the sponsor bank, it could be any bank, and the state government contribution is 15%. So this is how the regional rural banks capital is held. And moving on to the next slide is the regulation. As I told, it is under the dual regulation. So first is the RBI and next is NABARD, which regulates them. This dual regulation is also causing a lot of crisis in the management of regional rural bank, which we will consider later, but as of now they are under the dual regulation. Next is, what are the functions of regional rural banks? So they work as a normal commercial bank. The only difference is, first I'll tell you the function, then I'll tell you where the difference lies between the commercial bank and the regional rural bank. So the functions, like any other normal bank, they accept deposits, they also extend loan. Now what is this wage disbursement? So there are a lot of government schemes which run in states, and the central has to distribute salaries to the people employed in the scheme. So in order to eliminate corruption or the middlemen, the wage is distributed with the help of these regional rural banks. So this is the wage disbursement thing. And secondary functions like money transfer, if a person residing in village has to transfer the money, or want to have some foreign exchange or bill payment, these are the secondary functions which is also provided by the regional rural bank. So they work on the same line as any other commercial bank. The difference which comes here is that there is a condition on the loans that they extend. So 75% of the loan that they create should go to priority sector lending. Now let's suppose if there is 100 crores available at the bank which they want to extend as a loan, so 75% of it, that is 75 crores of this regional rural bank, should go to the lending in priority sectors. So now there's a list which is being defined by the government, and there are certain sectors which comes under priority sector, that is they are provided priority over the other sectors. So it includes, for an example, there's agriculture, there is education, housing, export credit. So there are a list of it. I'm just telling you the few. So 75% of their loan should go to these sectors. So here it is the difference which lies between the commercial and the regional rural bank. Moving on to the next slide, which tells you about various regional rural banks. So there are certain examples. You can just go through them. I hope it is clear as to what are the two kinds of bank which we have read in this video, that is the cooperative bank, and what is the aim of formation of such bank, and what are the regional rural banks. They are just another commercial banks working in regional area with the condition that 75% of their loan should go to priority sector lending. So this is all for the today's video, my friends. Keep revising whatever I am teaching you so that it just gets into your mind. Stay fit, stay at home. Thank you so much.